Jerome Powell just said a few surprising things at his Fed presser, and I really want to start with the most pressing and exciting things that were said. First of all, the meeting was going great. Everything was going fine. I was literally about to tweet out, this is the most bullish that I have seen Jay Powell in a long time. He was pretty freaking bullish the entire meeting. But then we started getting into some of the nuance in the questions, and that's where we're going to start with the summary today. Jerome Powell is convinced that somebody has to pay for tariffs. And I think Jerome Powell actually might be making a little oopsie doopsies here. I think he might be making a mistake because what he tells us is, quote, somebody has to pay. The producer, the wholesaler, the consumer, somebody has to pay. And everybody wants to keep kicking it down the line to where ultimately some of it will fall on the consumer. We know that's coming. And he makes it very clear. In fact, he goes as far as saying, we expect a meaningful amount of inflation to arise in the coming months. It's hard to see what's going to happen. Surveys and expectations are anticipating a, quote, meaningful amount of inflation that is coming. These were very bearish lines later in the meeting. Again, the opening statement, the summary of economic projections, all that was actually fine, maybe even more bullish than we thought. But these comments right here were not great. These comments were like, oh, okay, that's not fantastic. And for a brief period of time, the market actually went from rallying to selling off and going negative on the Qs, for example, because of these comments. And when you combine this with the second portion, the second sort of negative shocker that he mentions, he says, what's most concerning right now is not the labor market, because the labor market's strong. It's actually that, what if you're out of work? Well, if you're out of work, it's harder to find a job. If there were to be a significant rise in layoffs and the job openings rate is this low, then you would have a fairly quick rise in the unemployment rate. As you've heard me talk about on the channel over the last couple months here, the beverage curve is going to be something that the Federal Reserve really starts paying attention to. And it's basically a way of saying that when vacancies are low and hiring is low, it only takes a slight amount of an increase in layoffs to dramatically and rapidly expand the unemployment rate. And Jerome Powell suggests that this big wave of inflation is coming, which I think is a little overblown. Mostly, and here's my rationale for it, it is possible that businesses can actually absorb these tariffs through lower earnings per share. Now, that's actually very interesting because it means revenues could keep rising. It means people might be able to keep their jobs, but companies end up absorbing tariffs. Some corporation absorbs the tariffs, which we've seen in PPI, the producer price index inflation, and CPI just in this last month. We've seen some core good prices start rising, but no rise in the consumer prices, suggesting that companies are limited by their pricing power to raise consumer prices, which is what the Federal Reserve cares about, and instead the companies are absorbing the additional costs of goods sold on their income statements. In other words, they're taking a lower bottom line, less profit to the bottom line, which means less earnings per share to shareholders. But if the economy holds up and revenues keep growing, markets don't necessarily have to care. Maybe in a weird way, I'm being too bullish, believing that we're really not going to see a lot of inflation and that corporations would be likely to absorb this in margins, and then you don't really have a problem. That said, the rest of Jerome Powell's discussion, other than this warning on potentially layoffs or this warning on this big boogeyman of inflation coming, the rest of the presser was actually pretty dang bullish. It was so bullish, it's the perfect opportunity for me to mention that next month we're starting a big old trading challenge. It's also going to be swing trading, so not just options, but a lot of swing trading, especially on momentum stocks with at least a 500K, maybe even 750 to 1 mil portfolio. And we'll do a clean portfolio with course members. So if you want to get all those trade alerts when we start that next month, all 8 courses, every private live stream, the alpha report, all the courses in one place. We're now offering a one-time payment option. So a lot of people have been asking for it. So rather than sort of a recurring basis, go to the meetkevin.com website and you can get that membership all in one price. Once you're paid up, you never pay another fee. It's an option. Got any questions? Email us at staff@meetkevin.com. So with that said, let's get into what actually came out in the summary of economic projections. So I wrote a TLDR here. Okay, so the TLDR right here is, okay, yeah, coupon code at mekevin.com, we got it. No cut today. We already expected that. Higher for longer. That was the TLDR from the summary of economic projections. That's because PCE inflation numbers actually came in at a higher revision. Now, they only think PCE will go to 3%, but the way Powell was talking was that we would get some kind of surge of inflation, and he hopes it's just going to be one time. In the longer run, inflation seemed to compress and the unemployment rate seemed to compress, with basically more Fed members joining slower GDP growth, but not negative GDP growth. No mention or hints at all of a recession, but definitely hints and a lot of talk about more inflation and lower GDP. And also some flagging of how hard GDP is to forecast or calculate, that they could be very wrong and something could break very rapidly into a different direction. So to some extent, you got a little bit of a stagflationary read here, where you had this lower GDP forecast yet higher inflation, suggesting a stagflation. No indication, though, of the unemployment rate skyrocketing in their forecasts. 7 members forecast 1 cut in 2025, 2 see 1 cut, 7 see no cut in 25, 2 see 1 cut, 8 see 2 cuts, and 2 see 3 cuts. On the TLDR, we see stable unemployment expectations, slightly higher inflation expectations, slightly lower GDP expectations, and we did see the 10-2 spreads widen. In fact, one of the things you notice as Powell was yapping was you actually ended up seeing the 10-year rocket up. This was kind of a way of saying that the market was digesting what Powell was saying and saying, okay, got it. We have an inflation surge coming. We need to be worried about an inflation surge. And so you actually saw the 10-year, which was low because of the geopolitical issues. We were down 4 to 5 basis points today. You actually saw the 10-year yield rise because of these inflationary warnings. And when we looked at the 10s too, we saw a steepening of the 10-2 curve all the way up to as high as 47, though that did pull back to about 45, which is still a couple points higher than it was this morning. So in other words, a little bit of selling on that longer end of the curve because people are like, crap, maybe this war in Israel-Iran isn't going to be deflationary. Instead, we've got this big warning that, oh no, there's this boogeyman coming of inflation. Now again, maybe I'm like kooky dookie and I've lost it, but I actually don't think we're going to see a lot of inflation. I more resonate with Jerome Powell's massive optimism on artificial intelligence. On artificial intelligence, I was really impressed to see him talk about it for the first time. He says, well, I can't talk about immigration policy, blah, blah, blah. Goes into talking about AI, and what does he tell us? It's hard to say if AI is going to augment or replace labor, but it could cut in either direction. The progress we're making today on AI is truly impressive. It'll keep progressing over the next year, and it could really make people a lot more productive, which could actually lower inflation. So he argues that artificial intelligence could contribute to lower inflation in the future. Again, the big concern would be layoffs. Now, just today, during the presser, we actually heard Microsoft now announcing that they're laying off salespeople again because you could just use an AI chatbot. And now, if you're unemployed, you're kind of stuck in that Jerome Powell catch-22, where even though the labor market is really good and real wages are moving up, the problem that you're finding is if you're out of work, it's harder to find a job because there are fewer vacancies today. That said, Jerome Powell also said that we're well positioned to respond should any issues develop. He says employment is near maximum employment. This is the first time, by the way, I've heard him talk about maximum employment in quite a while. He also says that PDFP, in other words, measures of GDP, removing some of the crazy volatility of exports and imports, shows about 2.5% growth, which is still pretty good. Consumer spending moderated a little bit, but investments into capital assets expanded. He says a wide data set suggests that the labor market right now is consistent with maximum employment. He suggests that inflation has eased significantly. 3-month inflation is coming down, but it's going to take time for inflation to show up. A lot of warnings on that, by the way. He does talk about the economy growing at around 1.5% to 2% with sentiment rebounding. Yes, sentiment is still depressed, but frankly, the best thing that we could do for markets right now is stable prices and max employment, including the housing market. The more we get prices stable, the more we could lower rates, which is good for housing. The more we have max employment, it's good for housing as well. But again, the Federal Reserve, for whatever reason, is really concerned about inflation coming. It could be because Jerome Powell makes it pretty clear that in the past, consumer prices have always gone up under tariffs, and as a result, because somebody has to pay for tariffs, it's just going to be a matter of months before tariffs show up in the data. He says specifically this summer is going to be key. Well, we're in the summer, June, July, August. There are summer months. So if our summer months are June, July, August, then what do we, I guess, I think that's fair for summer months. Some people like to pick September as well, but I think June, July, August, June, July, August is pretty fair for summer. Jerome Powell tells us the summer months will give us the data that we need. Well, when are we going to get that full set of data? Well, we're not getting any June data right now, with the exception of some very preliminary data at the beginning of this month that we'll get, in the next week or so. What we're really looking at is collecting May data right now, which means we're really not going to get all of our August data until well into September, which unfortunately, in my opinion, does risk the potential that the Fed may want to kick the can down the road from September to November for the first cut. So you could actually still have 2 25 basis point cuts, once in December and once in November, while still kicking the can down the road to September to get that full suite of data between June, July, and August. Now, obviously, I believe that we're going to see some actual weakening in the labor market between now and Halloween, and I have a bet going on that. You already know about that. But my bet is that if we don't see a rise in unemployment between now and Halloween, and we absorb all these tariff impacts without a rise in unemployment, without a rise of layoffs, soft landing, best case scenario, because I don't really see inflation being a problem. Jerome Powell, on the other hand, is like, I don't know, man. I mean, things are great right now, but I'm a little worried about inflation and the boogeyman of inflation coming. It's like he's on drugs. I'm a little worried about inflation coming, I don't know. And if we start getting some layoffs, we got a few problems coming, and we'll know over the summer. We'll know. We got 3 months for more data. So he gives this pretty clear forecast, which, we've been talking about since even before Liberation Day, that even if we get liberated in April, it's going to take quite a while for us to actually get some of this tariff flow through and some of this data. That said, I'm very excited about what we've been chatting about on the channel and what we've been talking about in the Alpha Report, and that's why we've got at minimum 500K portfolio that we're going to be operating. It'll be sort of like a course member portfolio, maybe even move it up to $1 million. We'll see. A course member portfolio that we'll be swing trading in. So that way, when we talk about stocks like Circle and the stablecoin issuance, which this is like your only pure play, great short term, bad long term, we could talk about it in the Meet Kevin membership, and we can set our stop losses together and we can play these out together. So that's coming this next month. So if you want to join before we raise the prices for that, we're very, very briefly doing this sort of pay once and then never pay again option over at meetkevin.com for the membership. So consider checking that out. We go live every morning before the markets open for about an hour and do our analysis and our strategizing for the day. So check that out over at meetkevin.com. But anyway, this gives you an overall outline of what's going on with Jerome Powell. Oh, keep in mind, we were also big bulls there on Symbotic. Done a lot of fundamental analysis on Symbotic. But that said, go take a look at this commentary that you're going to see around Jerome Powell and pay attention to those two warnings: an increase in layoffs and the inflation boogeyman. Again, I'm more like camp inflation transitory on tariffs. I know that sounds like a weird camp to want to be in, but I think that's just the most transparent way for me to explain like where my head is. I'm way more concerned about that margin eating rather than consumers eating the prices. And will that margin lead to layoffs? That's the concern that I have. So we'll see. That's my POV and my take. So with that,
chew on this.
And yeah.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.